Welcome back to Money Moves. You know where we make, manage, and multiply money, right?
That's right.
So today we're diving deep into Forex trading.
Awesome.
And, we're not just dipping our toes in the water here.
Right.
We're aiming for those consistent profits, that build on themselves over time.
Yeah, like a snowball effect.
Exactly like a snowball effect of wealth creation.
That's the beauty of Forex. It's not about winning the lottery.
Right.
It's about creating a system for steady and dependable growth.
Absolutely. And you're absolutely right about that. It's about building a foundation that sets you up for success in the long run.
Yeah.
Speaking of foundations, your research dives deep into setting achievable goals. Just imagine for a second what consistent 3-5% monthly growth could do for your portfolio in a year.
Yeah.
It's pretty remarkable, isn't it?
Yeah, it is. And it really highlights the need to choose a trading style that complements your lifestyle and resources.
Okay.
Day trading's high energy. Swing trading kind of rides those waves of trends. And position trading is all about that long-term vision.
Okay.
Which one resonates most with you based on your research?
That's a great point. It's like choosing the right workout routine. You wouldn't pick marathon training if you only have 30 minutes a day.
Exactly.
So once you've nailed down your trading style,
Right.
your research emphasizes mastering a few high-probability trading strategies.
Absolutely. It's about becoming so familiar with these strategies that you can practically execute them in your sleep.
Really?
The breakout and retest, for example, relies on identifying key support and resistance levels.
I see.
And that's where backtesting comes in. And this is something your sources highlight quite a bit.
Backtesting, so it's like having a time machine for your trading strategy.
Yeah.
It lets you test your approach on historical data.
Yeah.
So you can see how it would have performed in different market conditions.
Exactly. And it helps you refine your strategy for more consistent results.
Okay.
You can identify what works, what doesn't, and fine-tune your approach.
I'm starting to see why your sources stress backtesting so much. It's like having a practice arena for your training skills, helping you avoid those costly mistakes in the real market.
Speaking of avoiding mistakes, your notes mentioned the importance of a trading journal.
Okay.
Which is like having a personal coach for your trading journey.
I love that analogy.
Yeah.
It's where you record every single trade, wins, losses, and the why behind each decision. It's not about beating yourself up over losses.
Right.
It's about analyzing your actions and spotting patterns to become a better trader.
That's where the real magic happens. By reviewing your journal regularly, you can identify those recurring mistakes, uncover underperforming strategies, and even notice emotional patterns that might be affecting your trading.
Wow.
It's powerful stuff.
It's like having a mirror reflecting your trading habits, helping you see yourself more clearly. And one thing that stood out in your research is the 1-2% risk rule per trade.
Yeah.
It's about protecting your capital for the long game, right?
Precisely. Think of it like this. You wouldn't bet your entire life savings on a single coin toss.
Right.
You want to limit your risk per trade
Okay.
to withstand a series of losses without jeopardizing your entire account.
That makes perfect sense. It's about playing the long game, not gambling your future on a single trade.
Right.
But how can you consistently make money if you're always focused on minimizing losses?
That's where the beauty of the risk-to-reward ratio comes in.
Okay.
Let's say you're aiming for a 1.2 ratio, risking $1 to potentially make 2. Now imagine you win only 50% of your trades.
You'd still come out ahead because your wins would outweigh your losses.
Exactly.
That's brilliant.
And your sources go even deeper, suggesting specializing in just 1 or 2 major currency pairs.
Oh, wow.
It's like becoming a local in a new city. You learn the shortcuts, the rhythm of the streets.
Okay.
Focusing on pairs like the EUR USD lets you deeply understand their movements and market sentiment.
So it's about becoming an expert in a niche rather than trying to be a jack of all trades in this vast Forex market.
Exactly.
That's a fantastic insight.
It is, and it brings us to another crucial aspect highlighted in your research, the importance of timing in Forex trading.
Okay.
It's not just about knowing how to trade, but knowing when to trade.
It reminds me of choosing the right moment to cast a fishing line. You wouldn't go fishing in a hurricane, right?
You're right.
So when are the prime times to trade Forex, based on your research?
The London and New York sessions are known for their high volume and liquidity,
Okay.
which often means smoother price movements and more predictable trading conditions.
It's like knowing when the fish are biting.
Exactly.
But just as there are ideal times to trade, are there times to avoid, based on your research?
Absolutely. Think of major news events like economic announcements, interest rate decisions, or political developments, these can create significant volatility in the market, making it harder to navigate.
This is like navigating choppy waters. You might get tossed around unexpectedly. It sounds like Forex trading requires a delicate balance of strategy discipline and a bit of intuition about market timing.
You're right, and that intuition is often honed through experience and a deep understanding of market psychology.
Okay.
Speaking of psychology, your research dives into the mental game of trading.
Oh, yes. The mental game, it's something that's often overlooked,
Yeah.
but it can make or break your success.
Yeah, for sure.
It's like the difference between knowing the steps to a dance
Right.
and actually feeling the rhythm and moving gracefully on the dance floor.
That's a fantastic analogy, and one of the key mental skills your research emphasizes is patience.
Patience, tell me more about how that applies to Forex trading.
It's about having the discipline to wait for the perfect trade setup, resisting the urge to jump in early or second-guess yourself. Think of it like a sniper waiting for the ideal shot.
So it's not about rushing into trades, it's about waiting for the stars to align, so to speak.
Exactly. And just as important as patience is the ability to detach yourself from losses. Remember, losses are an inevitable part of trading, even for the most skilled professionals.
It's like a surfer wiping out on a wave. They don't give up surfing altogether. They get back on their board and try again.
That's the spirit. Instead of dwelling on past losses, focus on analyzing what happened, learning from it, and sticking to your plan.
Okay.
Remember, consistency over chasing big wins is key.
It's like building a brick wall, brick by brick, rather than trying to construct the entire thing in one goal. Steady progress wins the race in Forex trading.
Couldn't have said it better myself. And speaking of progress, the journey of a Forex trader, as your research highlights, is a continuous learning experience.
So it's not a set it and forget it kind of thing. You need to constantly adapt and evolve.
Precisely. The market is always changing. What worked yesterday might not work today. So staying informed about global economic trends and events is crucial.
It's like navigating a constantly changing landscape. And to do that effectively, you need to keep your eyes on the horizon.
That's a great way to put it. And another thing your research mentions is the power of demo accounts for refining your skills and testing new strategies without risking real money.
Ah, yes, the Forex Flight Simulator. It's a fantastic tool, especially for beginners.
It is, and it allows you to experience the real-time fluctuations of the market and build confidence before transitioning to a live account. But here's a key tip.
Okay.
Treat your demo account as if it were real money.
Okay.
Don't get reckless just because it's not real capital.
That's great advice. It's like practicing your golf swing at the driving range. You wouldn't just whack the ball with all your might. You'd practice your technique and form so you're ready for the real game.
Exactly. And when you eventually transition to a live account, those ingrained habits will serve you well.
It sounds like we've covered a lot of ground.
Yeah.
From building a solid foundation to embracing the mental game and the importance of continuous learning.
We have, but there's always more to explore. And based on your research, there's one more key aspect we need to delve into.
Yeah, you know, your research highlighted something that often trips up new traders.
Oh, really?
The sheer volume of information out there.
Yeah, it can be overwhelming.
Charts, indicators, news feeds. It can feel like drinking from a fire hose.
It's true. Where does someone even begin to make sense of it all without getting completely overwhelmed?
Well, remember how we talked about mastering a few key trading strategies?
Yeah.
The same principle applies to information sources.
Okay.
Instead of trying to absorb everything,
Right.
your sources suggest focusing on a few reliable sources that align with your trading style and chosen currency pairs.
So it's about being selective with the information you consume, like curating a personalized news feed just for your Forex journey.
Exactly. It's about finding those trusted voices in the Forex world whose analysis you find insightful and valuable.
Okay. Those voices could be financial news websites, reputable analysts, educational resources from established brokers, or even online communities. Absolutely. Engaging with other Forex traders through forums or groups, as your research points out, can be incredibly beneficial.
It's like having a network of fellow explorers sharing tips and navigating the Forex landscape together.
That's a great way to put it. But speaking of exploring, you highlighted the importance of demo accounts in your research.
Ah, yes, the Forex Flight Simulator. It's where you can put all this knowledge and strategy into practice without risking real money.
Did your research uncover any unique insights about using demo accounts effectively?
It did. It emphasized treating a demo account as if it were real money.
Okay.
It's tempting to take wild risks when you're not actually putting your capital on the line.
Right.
but that can lead to bad habits.
Right, because there's no real emotional attachment to those virtual dollars. It's easy to think, why not go for broke?
But by approaching demo trading with the same discipline and risk management you'd use with real money, you're training yourself to develop good trading habits from the get-go. That makes perfect sense. It's like building muscle memory for making sound trading decisions, instilling those principles of risk management and patience into your Forex DNA.
You got it. When you eventually transition to a live account, those ingrained habits will be invaluable.
It's like learning to drive a car. You wouldn't just jump into a race car without practicing on a simulator or a closed track.
Right.
You need to build those foundational skills in a safe environment before taking on the real deal.
Absolutely. A demo account is your training ground, your opportunity to refine your skills and build the confidence you need to navigate the Forex market.
So we've established that a demo account is an invaluable tool for aspiring Forex traders. But your research delves into another crucial element of success: mindset. Trading can be quite the emotional roller coaster, wouldn't you say?
Absolutely. The psychological aspect of trading is often overlooked, but it's just as important as having a solid strategy and risk management plan.
It sounds like it's the glue that holds everything together. So it's not just about knowing what to do, but also about having the mental fortitude to actually execute those actions.
Exactly. Think of it this way. You can have the most powerful race car in the world, but if the driver isn't skilled and focused, it won't reach its full potential.
Okay.
Same goes for Forex trading. You can have all the technical knowledge and tools,
Right.
but if your mindset isn't right, you're likely to sabotage yourself.
So what are some key mental traits, according to your research, that separate successful Forex traders from the pack?
Well, your sources really emphasize discipline.
Okay.
It's about having the self-control to stick to your trading plan, even when emotions are running high.
It's about resisting those impulsive urges to chase trades, over-leverage your account, or abandon your strategy at the first sign of trouble.
Precisely. Discipline is the rudder that keeps your trading ship on course, even in the stormiest market conditions.
I like that. It's like a marathon runner who stays focused on their pace and strategy, even when exhaustion and doubt start to creep in.
Perfect analogy. And closely related to discipline, as your research suggests, is patience.
Oh?
Successful Forex traders understand that not every day is going to be a winning day.
Right.
There will be drawdowns, losses, and periods of frustration.
It's like a surfer waiting for the perfect wave. They don't just jump on every ripple. They patiently observe, analyze, and wait for the ideal opportunity to strike.
Exactly. And when those winning trades do come along, it's about having the emotional detachment to take profits when your strategy dictates, rather than getting greedy and holding on for that extra pip or two.
So it's about striking that delicate balance between confidence and humility, believing in yourself and your strategy while also acknowledging the inherent risks of the market.
You nailed it. It's about having a healthy respect for the market, understanding that you won't win every trade, and being able to bounce back from setbacks without letting them derail your long-term goals.
It sounds like Forex trading isn't just a test of your trading skills, but also a test of your character.
That's a great way to put it. And that's why, based on your research, we need to delve into some practical steps you can take to build a winning mindset for Forex trading.
Let's do it. What specific habits or practices does your research recommend to help traders stay focused, disciplined, and emotionally balanced?
One of the most effective practices your research highlights is having a pre-trade routine.
A pre-trade routine, like a ritual to get in the zone. What does that look like?
Exactly. It could involve reviewing your trading plan, analyzing market conditions, and setting clear entry and exit points before you even open your trading platform.
So it's about having a structured approach rather than just jumping in and reacting emotionally to whatever the market throws at you.
That's the idea. It helps you stay grounded in your strategy and make calculated decisions, not impulsive ones.
It's like an athlete warming up before a competition. They don't just step onto the field without preparing their body and mind. They have a routine that helps them focus and perform at their best.
I love that analogy. And just as an athlete trains their physical body, traders need to train their mental muscles. Your research mentions mindfulness techniques like meditation or deep breathing exercises to develop a calm and focused state of mind.
So it's about learning to manage the inevitable adrenaline rushes and emotional swings that come with trading.
Precisely. Mindfulness can help you become more aware of your emotional triggers and develop the ability to detach from those knee-jerk reactions that can lead to costly mistakes.
It's like a surfer learning to ride the waves of emotion without getting swept away by them. They stay centered, balanced, and in control, even amidst the turbulence of the market.
Beautifully put. And another important aspect of cultivating a winning mindset is setting realistic expectations, which is something your research dives into quite a bit.
So it's about understanding that Forex trading is a marathon, not a sprint. It's about steady progress, not overnight riches.
Exactly. It's easy to get caught up in the hype of making quick profits, but the reality is that consistent success in Forex takes time, effort, and a willingness to learn from your mistakes.
It's like building a skyscraper. You don't just stack a few bricks and expect it to reach the clouds overnight.
Yeah.
It takes a solid foundation, careful planning, and a lot of hard work to create something truly enduring.
Couldn't have said it better myself. And one final piece of advice from your research: celebrate your wins, but don't dwell on your losses.
So it's about acknowledging your successes without letting them go to your head, and learning from your setbacks without letting them erode your confidence.
Precisely. Every trade, whether a win or a loss, is an opportunity for growth and learning. By approaching each experience with a curious and analytical mindset, you can continuously refine your skills and move closer to your goals.
It sounds like success in Forex trading requires a blend of technical expertise, risk management skills, and a resilient, growth-oriented mindset.
You've summed it up perfectly. It's a fascinating journey that challenges you to grow not only as a trader, but also as an individual.
Well, it really has been an insightful deep dive into the world of Forex trading with you. And for our listeners who are eager to continue this journey of learning and growth, to learn more and build your Forex knowledge, subscribe to our channel.